Will Bitcoin finally be able to reach $78,000? Why is it so crucial that Ethereum has reacted the way it has to this defense zone? What implication does Solana's structural breakout have on this guideline? Let's start by recalling a bit. As you know, Bitcoin comes from a strong bullish rally we've been talking about, where Bitcoin curiously left us with a gap on the macro structure of Bitcoin, a structure that places the price at $78,000. Then, later on, in the last live stream we posted on YouTube, we were observing that after visualizing said breakout, what we wanted was to prioritize long movements, since, as you know, we were analyzing very good buying opportunities before the movement occurred. And when the price was around this point, of course, we could allow for some correction, but the goal was nothing other than to continue prioritizing long positions unless the price tells us otherwise. Basically, we had to see Ethereum decisively break above that defense zone. A bullish breakout that, as you can see, ended up being a completely failed attempt. Therefore, a structural confirmation that would invite us to look for those long positions did not come to fruition. Similarly, you'll also remember that with Solana, we were working on that guideline, and when the price was at that, what we had to demand from the price was also to seek a strong structural breakout with confirmation to look for those surpassings, as the imminent danger was that we were in a market limit structural zone, and in no case do we claim to have a crystal ball. That's why we saw the danger of Ethereum getting close to a defense zone, a level where we were going to be asked for our passport here at Customs. They asked us for our passport and we had an expired visa. Hence, the price returned the way it did. And actually, in this video, I'm going to explain why everything that's happening in the crypto market has happened. It's important to understand about price structure and its meaning, whether it's surpassed or not, despite prioritizing long continuations unless proven otherwise. We were very clear that at the time of the live stream we shared in video format on YouTube, when the price was at this point in Bitcoin, we saw clearly that we could be facing the extreme of a bullish trap and that this could lead, as a viable scenario, to a price drop. Now, what do I want to see? I want to see this. Why do I want to see this? I'm interested in seeing this horizontal line I've drawn for you, to know if they're coming to pull off the classic structural trap, right? I define a maximum for you. It seems to break it to go to infinity and beyond, trick you, and off I go. Alright, now it's time to update the analysis, and here you're looking at the Bitcoin chart in its 1 hour time frame, where you'll see a guideline that is containing the price, possibly compressing it against Bitcoin's macro bullish channel. Very well, you may have also noticed that all of this is essentially a range for which we've plotted a volume profile that you're seeing here on the left, and now notice how every time the price exits the value area, it remembers now. The value area is the part of the volume profile that is painted, in this case, in a lighter gray. So now notice how when the price exits the value area, Bitcoin needs to shoot back towards value in a feverish manner. And that's what we've seen just recently, like at that market extreme. The price has returned to seek value. Alright, now look at the following. We must also understand the following, and that is that we have a strong bearish impulse for Bitcoin here. This is a W, this is a Y, and here we've experienced a Z. And here we have its guideline. We know that Zs are tremendously aggressive and they need to impact a relevant structure. A relevant structure that we've identified by this anchor point, which has then been defended on multiple occasions later on. An event that, of course, the market wanted to take, hence we're seeing this reaction. So remember, when we have a strong bearish impulse, one way of having a corrective pattern is in its complex form, which can generate AWE, I, and a deep Z. And those deep Zs tend to impact relevant levels. Hence why we've seen how the price, since the collapse of the Z, has been so aggressive in its bearish directionality. I'll explain this line to you at the end of this analysis since it's important, but it makes even more key. And before moving on to your charts, let's talk about the following. We shouldn't overlook that we have a strong bearish impulse here. I think everyone sees this. All of this is a W as a concept. And here we've just formed a poor I. When this happens, we'll see what the price does here, but it's likely that at some point we'll want to go after that Z. So you've had a huge spoiler, because the idea is to visit $78,000 in Bitcoin in the medium term. Later in the video, we'll explain how we think these previous movements will play out, as it's likely that at this level, at some point, they'll want to visit it. Seeing this gap honestly worries me a lot. Now you're looking at the Ethereum chart, and I'll tell you that it gives us extremely qualitative information, which won't leave you indifferent, which I'm going to share with you now. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. In the case of Ethereum, we already know that we came from a very aggressive ascending wedge, which impacted a relevant key structure, and you'll find the explanation in YouTube videos where we analyze crypto long-term. Then, here we perceive a strong bearish impulse, and just like we see in Bitcoin, here we're seeing a W formation, the formation of a poor Y, and sooner rather than later, we may see the creation of an aggressive Z. We'll see, but what's also important is to identify that here we have a crick, a key level, that we know has recently tricked us. And here, zooming in a bit, you'll remember how in previous videos we were talking about this bearish impulse which formed a W here, a poor eye here, in which we were betting on the bearish trap, not prospering, with the sole purpose of looking for an aggressive Z that would break the crick of its accumulation to take us upward. Well, they break the guideline, test it, and generate the movement. But in other words, here we have a bearish impulse. A bearish impulse which has given us a W here, has given us a strong OI. And now at the current moment, just like in Bitcoin, we must assess whether the price will be able to respect the current levels, because if the eye is unable to break its guideline, if it can't break it downward, there will be a bounce in search of a Z. We don't know if it will take time to look for something aggressive. It will be aggressive directly. We'll see. Now look at how this Z, see how aggressive it was, going to find a key structural zone on which to react. The message being sent to us here. And now, cleaning up the chart a bit, what perhaps doesn't interest us as much anymore is to think to know that there's a bearish bias in the market. Because regarding the bearish impulse, when we have a corrective pattern that ends in an aggressive Z, there will always be a bias that doesn't guarantee 100 bearish success. And here we have that guideline of the corrective pattern that smart money, intelligent money, is observing. And we know very well what happens when the price doesn't feel like going down so much and the meaning that implies. But this will be much better understood when we analyze other altcoins such as Cardano. You know that Cardano is in a macro bullish channel, and in this case, we'll analyze it on a 4-hour basis, which will make everything much clearer, as on one hand, we were talking about distribution here, that they're defending our position here, and boy, are they doing it well. On one hand, here, we see an impulse and a replication that for the moment seems to have failed. We'll see later if we have another attempt at micro-replication that fails and, at the same time, signifies the failure of the macro search as well, which in the future we would bet on for a sincere breakout of this guideline. But I don't want to get ahead too much because in the end, here we are speculating, which is what we always do, and what we've identified here is the importance of understanding how this range has been auctioned. Let me zoom in a bit to help you see it better, and I want you to look at this volume profile. Look how here we have a low volume node. This low volume node is telling us that there has been very little transactional interest at this level. That's why we've drawn this dashed horizontal line, and if we go to the right, then you'll understand why the price had to react as it did so many times on that low volume node, just as it did recently. Now, look at how we're facing the same struggle again. Let's be clear. This low volume node, of course, has done its job, its reason for existence, and it's quite logical to think that if there was no transactional interest recently at this level, every time the price drops, if there's no counterpart here, well, the price will always tend to react. Here, we have to ask the next question and consider if we honestly think this is going to be infinite. And of course, this won't be infinite. Otherwise, the markets would be one directional. I think you understand. So at some point this will break and its significance will also be there. And look, just at the time of recording this video, they are attacking with great force. Let's see how far this takes them as we finish up this analysis. And here you're looking at the Solana chart, how we come from great bullish strength, how this guideline was holding absolutely everything, how it was recently broken, confirmed, a flat pattern was worked on, and now look what a great bearish breakout we've encountered. At the same time, you must be seeing that we've identified a crucial limit defense zone on which Solana can tease it, and of course can generate a trap scenario. If this were to happen and this really recovered, it would be sending short-term positive signals in the market. You can honestly use this as an indicator, not necessarily as a prediction, but it's very common that when we break key structures, the price tends to seek a very close defense zone where it finds its limit, and then the price reverses. This is something common. It doesn't always happen, but when we see things happening, we can have a highly valuable indicator. And what our friend SHIBA INU tells us is also quite clear. Recently, we experienced a great bullish fury. I think everyone remembers this. Here we mapped a defense zone, here a potential guideline to break, then zooming in to the hourly time frame, we see that we experienced a bearish impulse with its corrective pattern. Here we have the WW, the Y, and a quite clear Z with its own guideline that has broken and has gone to seek the guideline belonging to the bearish impulse that gives life and meaning to the entire corrective pattern. And now, at the time of recording, we are seeing how that guideline is being broken. What we're going to say here is that there's a very close defense zone that the price, if it wants to, can continue to decline whatever they want, which won't be the end of the world. It could be a generalized crypto bear trap before reversing. This short-term bearish trap doesn't have to happen. I mean, this movement doesn't have to occur. But what we're analyzing, what we're observing, is that there is margin. Of course it exists, and it wouldn't be harmful. It would be natural. It would be an elemental part of all the work that is being done for the medium to long term. And before we talk about our ideas for this medium to long term, I wanted to share with you again how the BGB token, after generating that strong bullish impulse that started that small correction. By this point, in YouTube videos, we began to track this token, the BIGIT token, very regularly to continually seek buying opportunities, and I have evidence that several members of Crypto Insight were able to buy throughout this area. And look at how the price gave a good return, roughly around 45. A real beast. And to conclude our analysis, let's look at Bitcoin, because we were definitely not far off with the concept that we can fall and that we have room for decline, since in the end, here we have a strong bearish impulse. This is a W. This is a poor I. And there will always be that bias to go seek the macro guideline to at some point in the future. Start from the macro guideline, or very close to it, a Z process which we will evaluate, we will study. But in other words, looking at where we're coming from, it seems like it's towards here. Where are we going? I hope you found this technical analysis interesting. If you enjoyed it, let me know in the comments, give the video a like, subscribe to the channel, and click on the bell icon so that YouTube notifies you of future uploads. Also, share our content with other trading and cryptocurrency communities. I look forward to seeing you in the next video and also inside Crypto Insight. Until next time.